Hello dear students, welcome to Devika's Commerce and Management Academy. So we'll focus today introduction part of holding companies. Very important topic. You cannot escape and also easy also. So holding companies are mentioned in the accounting standards 21, very clearly mentioned how to prepare this holding companies accounts and what are the formalities, what is the procedure, everything is very clearly mentioned. First of all, you have to focus on this theory part, then it will be easy for you to go for the practicals. Now, what is holding company? Hold, hold, hold on another company. One company is having hold on another company, that is holding company. In general, I'm saying. For example, we have a company A. Company A. There is another company B. Company B. So in this B company, our shares are 80%. We have invested on this B company 80%. 80% we are having. What is our company name? A. A is now here holding company. It's having command, it's having the hold, it's having the majority of the shares. That company, we say it as a holding company. Okay. Now B company shares are 100%. Out of 100%, 80% we are having. 20% only they are having. So this B company, we call them as subsidiary company. It means in this B company, 80% shares are taken by A company. Now how much is left? 20%. 20% who have invested 20%? Outsiders. 20% is outsiders invested. Who are the outsiders? We call them as minority. Here it is written minority interest, we say. Okay. 20% outsiders, we call them as minority interest, means outsiders. Simple. If you understand this, you got an understanding, you got an idea about holding companies. Simple. Holding company means a company who's having much command or much shares in another company, commanding shares, maximum shares, like 80% we said. So A is here having 80% shares on B. So A is the holding company. B shares are very less. So B, we say it as a subsidiary company. Now here in B company, 80% already taken by A company. Now how much is left? 20%. This 20% is outsiders. This we call it as a minority interest. These three terms are very important. Please remember: holding company, subsidiary company, minority interest. Am I clear? Now let's focus on the definitions. First one, holding company. What is the definition of holding company? A company which controls another company by acquiring majority shares is called as holding company. A company which controls another company by acquiring majority shares. This company is having control over the another company by acquiring majority shares is called as holding company. Here A company is having 80% of the shares on B company. Then A is having much majority of shares. So that is 80%. So we say it as a holding company. And now subsidiary company. A company which is controlled by another company. A company which is controlled by another company is called as subsidiary company. Now here this company is controlling by A. Now this company we say it as a subsidiary company. Clear? Now coming to the types of subsidiary companies. The subsidiary companies, two types of subsidiary companies are there. One is wholly owned subsidiary company. Another one is partly owned subsidiary company. Wholly owned subsidiary company means total shares are purchased by holding company. Now here we thought 80%. If it is 100%, then it is first one wholly owned company, owned subsidiary company.
Second one is partly owned subsidiary company. Partly means here 80%. If 80% means this is second one. If 100% means total shares are purchased or total shares are purchased by holding company, then it is wholly owned subsidiary company. Most of the time you won't find this one. Practically if you see, you will find most of the time second one only, partly. 70%, 75%, 80%, whatever it may be. Clear about this types of subsidiary companies? Now coming to minority interest. I already explained minority interest. If you see in general definition point of view, minority interest means the share of outsiders in subsidiary company is known as minority interest. The share of outsiders. 80% is holding by A company. Now leftover is 20. 20 is outsider. The share of outsiders in subsidiary company. 20% is left in B company, subsidiary company. So this is taken by the outsiders. So that we call it as a minority interest. This we are showing it as liability. Minority interest. We are preparing holding company accounts. In holding company, so this is, we call it as a liability. Means only 20% is outsiders. Outsider anyhow someday we have to pay. This 20% we have to pay. Holding company is having 80%, 20% is outsiders. For them, we have to pay someday. That is the reason we say it as a liability. Minority interest. When we calculate minority interest, it will be shown on the liability side. Clear up to here? What is holding company, what is subsidiary company, types of subsidiary company, and then minority interest. Now, computation of minority interest. How to calculate the minority interest? Minority interest means this 20%. How do we calculate? Simple format you can remember. First, we'll take paid up value shares held by the outsiders. This 20%. 20% value we are taking. 20%, suppose say it is 10,000. 10,000 will write. 10,000 will write. This is the major amount, 20%, whatever is there, that will write. To that, what we are adding? Proportionate share in the subsidiary company, subsidiary companies, capital profits and reserves. If you get capital profits, so only we take the proportionate share. Please remember this word, proportionate share in the subsidiary companies, capital profit and reserve, this will add. In the same way, another item we are going to add, that is same proportionate share in the subsidiary companies, revenue profits. Here capital profits and reserves. Now second one, revenue profits and reserves. If you find any of these, capital profits or revenue profits, proportionate share of the subsidiary companies, that we are going to add. Okay, if you get a loss, then that will be deducted. So this is all the proportionate share in the subsidiary companies, revenue loss. Revenue profit added here. Revenue loss means we are deducting. Deduct it, minus it. So that you get the minority interest. Simple format you have to remember. Able to remember? Actual value of the minority share amount will write. What we are adding? Two items we are adding. Proportionate share of the in the subsidiary companies. What is that? Capital profits and reserves. One. Second one is proportionate share in the companies. What is that? Subsidiary companies. Proportionate share of subsidiary companies, revenue profit and shares. Capital profits and shares, revenue profit and shares added. What we are deducting here? Revenue loss. Proportionate share of the share in the subsidiary companies, revenue loss will deduct it, so that you get the minority interest. Anything if you find, you have to follow according to this. Revenue profit, capital profit, add. Revenue loss, deduct it. Not given, ignore it. We can take as it is, this amount. Okay, this is the way to calculate the minority interest. Now let's focus on the, you have to prepare here holding companies consolidated balance sheet. Which companies? Holding companies, not subsidiary companies. So when we prepare consolidated balance sheet, few points you have to remember. What are those few points? Major points I am explaining here. One is that
you'll be given subsidiary companies, holding companies, both the companies' balance sheets. Okay, subsidiary company, holding company, both the companies' balance sheets will be given. First point you have to remember, add fixed assets, current liabilities. These three, fixed assets, current liabilities. These three of the holding and subsidiary companies, just simply add and show it in the consolidated balance sheet. Don't do anything, simply add. What we are going to add? Fixed assets, current liabilities. Okay. Second point, very important, the investment of holding company. Holding company is investing something that will be given in the balance sheet asset side. That one, the investment of holding company and the share capital of subsidiary company, both we have to avoid. We are not supposed to take it into the consolidated balance sheet. Investment of holding company and share capital of subsidiary company, both will be comparing. Suppose holding company investment is, for example, to make you clarity, the investment of holding company, suppose say it is 5 lakh, and the share capital of subsidiary company, I'll write it in. So investment is 5 lakh, but share capital is how much? Investment 5 lakh. If share capital is, suppose say it is 3,50,000. Both will be compared. I am investing 5 lakh, whereas share capital is 3,50,000 only. But 3,50,000 I am paying more. So 1,50,000 is, we call it as a reserve. If you get a goodwill, what do? We write it on the balance sheet asset. This is an asset. If you get a capital reserve, it's a liability. Am I clear? Goodwill or liability. So the impact of this investment of holding company and share capital of subsidiary company, we have taken into the balance sheet, either in the form of goodwill or either in the form of liability, that is capital reserve. We have taken, that is the reason we don't show it. Got it? So these 3 points, hope it is clear. Now coming to the fourth point, consider only holding company in the balance sheet. We take some of the transactions of only the holding company because we are preparing holding company. Okay, and subsidiary companies only goodwill or minority. Subsidiary companies we don't touch anything. We don't touch much. We consider mostly goodwill and minority interest. Am I clear? Please make it sure. So these points, if you remember, you got an understanding about holding company. Now consolidated balance sheet we have to prepare. I told you. What is the format? Did you remember companies accounts, company accounts? Same format you have to prepare. Just to remind you, I have prepared here consolidated balance sheet, simple balance sheet. So the same format we say it as a consolidated balance sheet. Format, let me remind you, same company's account which we have learned in the corporate accounting. Okay. Now here consolidated balance sheet, we are taking first equity and liabilities. Equity and liabilities means related to the liabilities. Under that we have 3 columns, remember. Shareholders funds. Under shareholders funds, what do you write? Share capital and reserve and surplus. Share capital and reserve and surplus comes under the shareholders funds. First point. Second point is non-current liabilities. Non-current liabilities means long-term borrowings. Okay. And third one, current liabilities, which is trade payable, simple trade payable. Okay. So these 3 we consider it as a liability. क्या है? Somebody rang the door. Okay. So remember, liabilities are only 3 items you have to remember. One is share capital fund, shareholders funds. Shareholders funds means share capital, reserves and surplus. 2 points. Second one is non-current liabilities, means long-term borrowings. Third one is current liabilities. Under current liabilities, most of the time you will find trade payable. Trade payable means nothing but creditors, sundry creditors or bills payable. So this is about the liabilities. Under this, you'll write the assets. This is liabilities and assets. Same, there's no space, so I'm writing on the this side. Otherwise, vertical format under the liabilities, you'll be writing the assets. Assets, how many columns are there? Only simply how to remember non-current assets and current assets. Non-current assets means tangible assets, intangible assets. Non-current asset, tangible, intangible. Tangible assets means, as like machinery, building, which is visible, tangible assets. And the second one is intangible assets, like patents, goodwill, which is not visible, intangible assets. So these two comes under the non-current liabilities. Now current liabilities, current liabilities most of the time trade receivable, which is sundry debtors and bills receivable. And cash and cash equivalents, cash in hand, cash at bank, these two comes under the cash and cash equivalents. And other current assets, any other current assets if you find. So same format, same like company accounts we are going to follow. Am I clear? So take a screenshot. Next class we'll have practicals, but have an understanding about holding company, subsidiary company, minority interest. How do we calculate minority interest, and what is this consolidated balance sheet? How do we prepare it? All these things you should have an understanding. Then only it is possible for us to go for the practical problems. Clear? Check out the playlist. There are many subjects which are already prepared, and don't forget to share these videos. Have a bright career. Good luck.